Let me show you. We haven't drawn it yet, so you still have a chance. Okay. Yeah. Potentially mid next week. So. Okay. Yeah.
Okay, boys, you're live. Who you want to thank today? Do you want to thank the Academy?
My agent, Academy.
Yeah. God? Anybody want to thank God?
Scorsese for giving me this role and work all my life. Finally playing Star Wars.
Okay, Internet, we're live. This is Casual Friday, so we're not going to curse, but a lot of dirty jokes might transpire. just be patient with us.
Not exactly. Okay, but I was downstairs. Okay, but I was downstairs. So, but maybe these are the people that we didn't let in because I went. Yeah, because I went to the ground floor and I was went to more people in the front enter or who are at the reception desk. So it seemed like nothing out of usual. I don't know if they can think so.
I'll send you my.
Just to tap it. Yeah, usually I'm just that. Sembrava fosse pensato, insomma, altro successo si vede naturale.
Excellent, excellent. Good evening, everybody. Good afternoon, I guess. It's still afternoon, it's pretty dark. Welcome to our little soiree. It's a casual Friday, as you can see. Stellar, I wanted to ask you this. It's a small group, so it shouldn't be too complicated. How many people here are technologists, computer guys and everything, if you don't mind? So we've got about 6, 7, 8 people. So we've got about 6, 7, 8 people. What about lawyers? Do we have any lawyers in the house? Sam, I know Sam. Sam Robinson from CMS is going to be one of the speakers later on. Bit of a spoiler, sorry. I had to do it. So we have a couple of lawyers. We got about 7 people on the technology side of things. How about asset managers? Maybe someone from that corner. Thank you, sir. We have 1 asset manager. So, okay, all right. It's just to get a balance for things. So majority here is technologists. The guys that are probably dealing with blockchain know exactly precisely what Stellar is, what's it about. Again, welcome. I'm not going to take up too much of your time. I know everyone's eager to get out there and start their Friday night things. We'll start with strategic advisor to Smartlands, Victor Krikotin. He's going to give us a rundown on Stellar, what's going on with the whole thing. He's going to tell us what's the freshest on that network. So, Vita, could you please come up here and take over, because I already said way too much.
Thank you for introduction. I would like to discuss today Stellar Network, its applications, and how it is a good network or technology for issuing security tokens and to perform security token offerings on Stellar blockchain. I'll start with discussion of what Stellar is. Stellar is a comprehensive open source platform for financial services that range from simple transfers of XLM, that is native coin to Stellar network, and ranges to trading of any assets on Stellar network, those assets could be as well security tokens. Key concepts of Stellar network and its design, of course, it's accounts and public-private keys, but in addition to this, there are account settings that provide special properties and characteristics, assets that could be issued on from those accounts, and those account settings also regulate behavior of assets issued by those accounts, and trust lines that enable accounts to hold certain assets. Then the audit book or Stellar decentralized exchange that is formed with offers for any kind of pairs of any assets on Stellar blockchain. That includes currency to asset pairs, currency to currency pairs, assets to asset pairs. So basically anything could be traded to any assets. And ledgers, that is blocks of Stellar blockchain, and validators that form those ledgers. Stellar network is a network to issue any asset and represent any kind of material asset on blockchain. So for example, banks can issue anchored, if they are anchored, so meaning that they hold some asset and issue tokens to represent those assets. Once those assets are represented on Stellar blockchain, they can be easily secured and fast transferred, traded, and be subject to smart contracts. Additionally, there is a possibility to make pass payments. That means that you send, for example, Nigerian dollars on Stellar network to a person that will receive Chinese yuans, and network will automatically find optimal paths to do this. It could be actually alternative to explicit audit book of Nigerian dollar to Chinese yen. This could have a huge spread or low liquidity, but for example, audit book of Nigerian dollar to Lumen is filled with many offers. It's liquid. The same with Chinese yuan. So you can go through Lumen, and it will be way more effective. And network supports finding a path that will be the most effective one. Very prominent feature of Stellar network is the Stellar consensus protocol that is based on Federated Byzantine Agreement. It's rather complicated issue. I will not discuss it now, but the idea is that it is based on flexible trust, and it is neither proof of work nor proof of stake, and it's resilient, it's safe, it's fault tolerant, and it provides a huge capacity of thousands of transactions per second, and ledgers, closing of ledgers every 3 to 5 seconds. That's way faster than any other major blockchain. Another feature of Stellar network that's built in compliance protocol to exchange data that is required for compliance with regulation when dealing with financial assets like currencies or security tokens, so on. And the Stellar network ecosystem comprises of Stellar network that is run by Stellar cores or nodes of this network that process all transactions, validate them, and form ledgers. Then we have Horizon, that is RESTful API for Stellar network that provides ability of other participants, like all kind of applications, to interact with Stellar network, meaning to get balances, get transaction history, send transactions to Stellar network. Yep, and third-party applications that provide the ability to transfer some assets, trade them, maybe voting, even messaging, whatever you like. You can create an application on that will be based on Stellar network. So that's pretty much it about the description of Stellar network. Now I will discuss recent developments on Stellar network. The most prominent one is the creation of Interstellar that was done by merging of Lightyear and Chain. Chain was the company that focuses on blockchain applications in financial markets, while Lightyear was somehow Stellar related companies that also specialized in this area. And there are two major results of this merger. That's creation of StellarX, that's easy to use interface for Stellar decentralized exchange. It's functional, it's very fast, easy to use, free to use. Not that it costs much to use Stellar network, but it's absolutely free, and it will implement all the features that are in Stellar network and Stellar decentralized exchange in very simple and easy way to understand for users, as well as it will implement anchored fiat currencies to buy any assets on Stellar network much easier and faster compared to the way like buying first Bitcoin and Lumen with Bitcoin and then some asset with those Lumens. So that's 3 operations. You can cut the way to 1 or 2 operations. And Starlight, that's actually an application of Lightning Network on Stellar. Now it's implemented with a limited functionality on testnet, but quite soon I suppose we will see Lightning Network application for Stellar blockchain. Now I would like to discuss security token offerings and ICOs to explain why Stellar network is good and describe ICO market. It looks like it was quite good during the first part of 2011, about $20 billion in ICO proceeds, more than 700 ICOs. So it looked like booming market, unless you look for statistics on performance of those ICOs. Basically, less than 10% of them survived, with 80% being explicit scams and frauds. So yeah, that doesn't look nice, right? So is regulation good or not? It's quite obvious that no regulation results in frauds, price manipulations, it's pump and dump strategies, inappropriate use of funds by ICO projects, extreme risks for investors, and so on, while excessive regulation has other consequences like low flexibility, large costs, lost opportunities, and so on. So yes, we have to find some balance in between that would be optimal, but it's quite a complicated issue, and there is no solution so far, I guess. We believe that self-regulation of the market and democracy in setting of the rules may fix this issue, because optimal level of regulation is dynamic thing. It depends on conditions, and if conditions change, and they change, then regulation should be amended quite fast, and it's an ongoing process. Yeah, blockchain provides for decentralized management and regulation of those processes. There is a comparison of IPO, STO, and ICO. That's we are talking about STO on the crowdfunding concept or framework. Of course, I understand that those values may spark quite a lot of discussion, but just my perception, let me show it, and it seems like security token offerings under crowdfunding framework is optimal solution that's in many cases better than either IPO or ICO. So once we decided that STO is an optimal solution, let's find a best solution for implementing those security token offerings. Ethereum was the most popular by far network to issue tokens and to perform ICOs. But if we look closer, its technical capabilities are way worse than of a Stellar network. Actually, that's Ethereum. I mean, is a good network. Let's say MVP or some testing, testnet, or some kind of actually, it's to use it as a sandbox for your solution, but industrial applications are hardly possible on Ethereum network with their current capabilities and capacity. On the other hand, Stellar network actually can perform even much better than it performs now if there is no limitations on ledgers. Then it can reach capacity of 10,000 transactions per second. That requires quite powerful servers to run those nodes, but still it has already been reached, this productivity. We have Lightning Network coming. It will increase capacity even further, and actually it can take off blockchain, some partially off blockchain transactions, huge amounts of small or irregular transactions with periodic settlement of the differences. And currently Stellar network can run on quite low tier server, like that is very cheap and easy to run. Anybody actually can do this, and unlike buying a miner that costs thousands of dollars, at least it costed so much quite recently. And another comparison that's about smart contracts, that's the best selling point of Ethereum network, that it has Turing complete programming language, but in most of the cases these capabilities are not used by projects, and that's just actually abuse of this idea. Almost every ICO could be structured with Stellar smart contracts that are not Turing complete, but it can provide a very complex behavior of tokens, and it's much easier to implement it, to check, to control, and it's much more flexible. So that's pretty much it. You see the community links for Stellar Network, and thank you for your attention, and I will be happy to answer any of your questions. Yeah.
So the trading volumes in Stellar seems. Do you want?
Yeah. So the trading volumes on Stellar seems relatively low when compared to other exchanges. Why is this, and what's being done to increase the volumes?
What's being done? That's StellarX. It's much more useful, I would say, interface compared to all others that were before, and why it's slow? Because actually it's on blockchain, and I mean, there are two issues. First, Stellar Network was not much used for ICOs, therefore there are much less assets there, so that's one reason. Another reason that's blockchain trading, so any volume pumping activities are easily seen. It's no secret that major part of cryptocurrency exchanges artificially increase their trading volumes, and since it's their just own database, nobody can see what's happening there, unlike on Stellar network, so anybody can see if there's volume manipulations are going on.
Just a quick question. One of the key founders of Stellar was originally part of Ripple, XRP. So what I'd like to ask you is, what is the main difference between XRP, XLM, or Stellar versus Ripple?
As you know, Jed McCulloch is one of the founders of Stellar Network that was both in Ripple and Stellar. And Stellar is actually a fully decentralized system with flexible trust. And I guess that's the major difference between Ripple and Stellar.
A question on the international remittances. For how many currencies is that actually working? Because, I mean, of course it makes sense in theory, but does it work for small currencies and small countries, small developing countries? I know that's the goal, so I'm just wondering what the status quo is.
I can't say for sure, but I guess it's about 10 to 20 currencies now.
I've seen earlier in the presentation that there was a mention of proof of concept, but a test by Barclays of the Stellar network, right?
Yeah.
Is it is it related to their own proof of concept, like the idea of using the Stellar ledger for any of their services or for experimenting with it, or is it just like a one-off thing?
Sorry, I don't really know the story behind it, but yeah, I know the facts, so I discussed. I can follow up on this question a bit later.
Excellent Friday night fitness. Love it. Perfect. Thanks for the opportunity, guys.
Hi. Regarding the security token offering, do you have any use cases with Stellar Network?
No, not yet.
We actually have two. I forgot. We could delegate one of the members of the audience to do the same.
Do you have an update on when Lightning will be fully launched?
Sorry?
Do you have an update on when the Lightning network will be fully launched?
There is no exact date for launch of Lightning Network, if that's your question.
Yeah.
No, in the public network, there is no exact date when will it be launched, but it's already launched on testnet that is actually almost identical to public network. So it can be done very soon.
I want to ask from a user point of view. I've got a wallet on Stellar. So would you have some example how to trade and sell? Because I found it quite confusing on Stellar and not really helpful. I sent a message to support and I received only a reply 2 months later. When I followed up a few times, I sent angry messages. So is there any way we could just get into the Stellar platform now? And just in case, I'm happy to if I log into my wallet.
Stellar X is very much like.
I'm talking Stellar port there.
That's not Stellar Development Foundation related project, but I would be happy to help you if you have any questions. But
I've got lots of questions.
Most likely Stellar port was the company that you wrote, and that's based project on the Stellar network. might reply to you faster.
Okay.
Yeah, but yeah, that's not the responsibility. I mean, of course, yeah, that would be very hard for Stellar Development Foundation to answer questions about all the projects on their network, but yeah.
But I like the fact that it's transparent, you can see everything at the same time. I'm a bit playing around, selling, buying tokens. So I've got currently wallet with Stella, so I want to be a bit more fluent. And I was hoping on this workshop will be more practical workshop rather than a general concept.
Okay, that may be next time, but for you, I can explain all the details you would like a bit later.
Okay,
What Polite Victor is trying to say is from the standpoint of customer service, our space is really not that great. It's important to admit, but I'm sure there's a lot of people out there that are working on it.
They were
in one
tweeting
way
a
or
couple of
another.
days ago, they were tweeting that we have support now, finally, some place. I checked today, but I couldn't find where the support. There was like an arrow to the left corner, there was nothing there. So I thought I'll find out here. But anyway.
But you said you had many questions.
Yeah, I've got many questions. I'm going to ask privately. I don't want to hijack this. But
Any more questions? You fellas have a question on your face right there. Antanas, do you want to ask anything?
Privately.
Okay, so I guess we're going to wrap it up with Victor and thank him so much for a very informative presentation. That was awesome. And basically hand it over to Arnoldas Nausėda, CEO of the Smartlands platform. He's got plenty to show and say as well. Hopefully it'll be as informative and entertaining as the previous speaker. Thank you, sir.
Hello, everyone. My name is Arnoldas Nausėda. I'm the CEO of Smartlands platform. I will tell you, we are the first, basically, Stellar-based ICO on Stellar Network. And we're working on security token, on real estate tokenization. So I will tell you about asset tokenization, why it is important and what is it. So first of all, about Smartlands, we were founded in mid-2017. We're based now in London, in Vilnius and Kiev. We're around 15 people and growing, and we have several partnerships and collaboration projects with some big companies. So, it's a sort of educational presentation. Education is important, but cryptocurrencies are also important, right? It's now the market is plummeting, but in schools the people are being taught that cryptocurrencies is the future. So it's just a bear market now, but we believe in cryptocurrencies. So I will start from the equity trading. Today the equity trading is actually quite complicated and quite involves a lot of intermediaries. So between seller and buyer, you have a bank when you do the transactions, you have banks, you have to deal with the seller, brokers. On the buy side, you need to deal with the buyer's broker. You deal with the issuer, you need to deal with the registrar, you need to deal with the counterparties, clearing houses, custodians, etc. So what we believe that applying the blockchain technology, we can eliminate all intermediaries basically, and because it's the ledger is immutable, auditable. That can be basically all the value chain can be made quite cost effective, and intermediaries can be basically removed. So we believe that it can look like this, where seller and buyer engages on P2P network, and they can sell the fractional ownership or asset based on basically on the blockchain network. All you need is issuer basically and the clearing house with custodian, so that you see that all the intermediaries basically have a cost involved. So with the blockchain, basically you remove the cost and it becomes much less cost effective. So that it means that all the transactions are really very cheap. So advantages of the tokenized assets are the speed of execution. So Victor showed you already that it's takes seconds to make a transaction. We have opened the borders, so it's really becomes borderless, because you can transact between different countries. The investor base becomes much larger, and we have a transparency. So where in the moment we don't see transparency in the financial service world. This can be manipulated. So what we see that technology has advanced, right? So we had the carriages, horses back years ago. Now we have coming autonomous cars. So what we say that years ago also the trading was taking place in the marketplaces, person in person, and we see that based on blockchain we can really advance our trading. So we see that when cars came on the market, that all the horses basically become redundant, right? You didn't need horses anymore, and that's basically technology has done this. So what I want to say here is an example of, let's see, house. Says this house worth 1 million euros, and we issue, let's say, 1 million tokens, which one token is worth €1. This is a code, private key, that represents the ownership small ownership of the house. And because of the blockchain, then you can trade. It becomes this small fraction of that house becomes liquid, and liquidity is very important in this. That it's a driver of the whole ecosystem. So remember, liquidity is really what drives this technology evolution. So see, liquidity, for example, we're focusing on real estate, and real estate is treated as a liquid asset. By tokenizing, making it liquid, we can unlock some liquidity. Because say mass market, they cannot buy 1,000 of piece of property, because the entry barrier is quite high. So by tokenizing, by making the assets liquid, we believe that in theoretically the liquidity premium can be unlocked. So say 20-30% can be unlocked. So that's your premium by liquefying the real estate assets or other illiquid assets. Here's another example of a car. Say you have a Ferrari, you can tokenize the whole ownership of Ferrari, and Ferrari generates revenue from renting. So that's basically if you own tokens of that Ferrari, so it can basically then you can get the revenue share split into the token, so that you can basically buy Bitcoin, with Bitcoin, Litecoin, fiat currencies, etc. So that's a car token, right? What we see in the market that a lot of basically objects are being tokenized. So say we have diamonds being tokenized, currencies being tokenized, oil is being tokenized, houses, etc. So we see a lot of businesses popping up and trying to tokenize various assets across different classes. So the tokenization is already happening as a movement in our world. Here is basically the traction from the incumbents from the Swiss Stock Exchange. Well, they say that The first step is to build a regulated exchange platform. The second phase, we will offer the service to tokenize existing bankable assets, followed by tokenization of non-bankable assets. So see that, you know, the Swiss big company is also, you know, making the moves towards the asset tokenization. So that's indication that it's happening. Here is another example. Custodian Kingdom Trust, digital asset custodian launches platform backed by Lloyd's of London. So, you know, they're planning 3 different digital assets, plans to expand its coverage, and establish itself as one of the only institutions options for holding of digital assets. So that's another example of a big company going into this space. I talked about liquidity. At the moment in the world there is about more than 200 trillion real estate assets. All these real estate assets are liquid. So by making them liquid, we can unlock, if we unlock 20-30% liquidity premium, so that's additional 50-80 trillion in dollars, right? So there is huge market, you know, to make assets liquid and work on this movement. Here is a list of tokenizers basically working on tokenization projects, on real estate, on securities, on alternative assets, on commodities, etc. So some of these companies we are forming now the Digital Asset Standards Association. We met last week in Brussels. So we are 40 companies around this table, and we are forming the association, and we be building the equity token standards. So which the association will be a sort of lobbying legislation impacting body, you know, on the global scale. So we have companies from Australia, from Singapore, from America, from UK, from Europe, etc. And in order to be scalable, so we need standards. So the ownership, with the regulation, etc., etc. And that will take time, but you know we will do this. That's a long shot. So how do banks make money? So banks has, you know, many different products. So credits, deposits, payments, custody, trading, derivatives, portfolio management, etc. And we believe that asset tokenization will impact all of these products. By impacting, because you know the products that we're making less cost involved, and that's really a threat to the banking sector and banking institutions. Regulation is coming. Regulation actually is, as we see it, some of the first movers in the world. So Singapore, Lithuania, Estonia, Malta, Gibraltar, UK is working on the standards, how to regulate the tokens. So there are utility tokens, payment tokens, security tokens, and all of these regulators are basically working how to interpret and how basically the businesses can work in a legal way with it, you know, different kinds of tokens. So security tokens are part of this. In Singapore, I think the guidelines is clear. In Lithuania, we have guidelines. In UK, it's coming. Maybe Sam can mention a little bit about that. So what I wanted to show, so we have a building, so why not to do the IPO on the building? So say you are the owner of the building, so you want to do, let's say, for example, renovation, so you can tokenize and do the IPO, sort of little IPO for a building. So you tokenize 20%, you value a building, you issue the tokens, security tokens, and you tokenize part of that building. You make it liquid, that building, which is then, and then at the same time, you basically raise the capital for your improvements. So you raise the capital, you improve, basically refurbish the building, increase the rent prices, and have maybe some liquidity in your pocket, you know, having these security tokens, which you can, you know, sell, you know, on the market. So that makes possible the asset tokenization. So I mentioned about this revolution. We also want to say that it's evolution. Earlier, years ago, we had paper stock certificates. Then it was moved to the central, basically, register. And now the next step is actually moving decentralized way. You have the private key, and then by keeping the private key, you keep your ownership on the decentralized ledgers. So that's the evolution what we see. Thank you very much. I also wanted to share with you that next week on Tuesday in the Smartlands platform, we're starting our KYC process, which will be basically unlocking and having the ability to invest in our first security token projects, which we are planning to be tokenized and open for our investor base in February next year. So please come, register, on Tuesday, start going through the KYC, and then, next phase will be investing into our first project, which will be most likely based in UK. So happy to answer your questions.
Okay. Hang on for just a second.
Yeah.
Microphone so the entire world can enjoy the session.
What's the token called?
Our token is a utility token, which we done ICO a year ago.
Yeah.
It's called SLT.
SLT.
SLT, yeah, it's a year ago, yeah. So the market went down, our token going up.
Okay.
So it's really, our community believes in our project. It's really, that's the next move. So I can tell you the stats. Basically, at ICO, the people invested 50p dollars cents, and now the token I think worth 9x, so for $4.50, something like this. Yeah.
Can I ask you a question about regulation? I mean, one feels that the regulation that's gone on the cryptocurrencies so far has been quite hostile. I mean, it looks as if the regulators would rather not have Bitcoin than try and make Bitcoin easy for everybody to buy. Do you find from your meetings in Brussels that in the case of these tokens, there is a more positive attitude to try and help develop the market in competition with the traditional securitization vehicles? Do you feel that the regulators are genuinely more supportive and are going to try and help?
Yeah, so I'm talking with the various regulators. Actually, we have, Europe, Lithuania, we're talking to regulators, and we're planning to open, to go into Europe through the Lithuania as a gateway to Europe, talking in some other jurisdictions. So what they say, basically you can do your security tokens, it's two basically parts. If you work with the cryptocurrency, that's one aspect. If you apply, you can apply different technologies as you can use blockchain, Corda, Stellar, all other blockchain technologies, and issuing security tokens, getting the money from, fiat, basically fiat money to buy the security tokens, it's fine with the regulator. When it comes to the cryptocurrencies, then it's actually technology challenge how to track, KYC and AML, and how to track. If you have a system, how you can track it down, so there is no AML, money laundering, leakage, etc. So if you can prove this, that's fine, but that's the challenging part. So that's why regulators, they want to see, they know that it's really subject to various potential risks, and so that's really is what you see. So we're planning actually to accept the cryptocurrencies, but we will not, our KYC people, all our investors will be basically all trading and all issuance, all buying will take place in our platform. It will not go. So I think Matthew will be able to elaborate on this more, and Sam on we have a compliance actually professionals here, and also the legal professionals. So you can also maybe add on my answer later on.
How does the price and volatility of the SLT token affect your ability to grow and operate as an organization? So you said it's gone up since its ICO, but more recently it's gone down, the price of Stellar. Does that affect your day-to-day operations?
Yeah, all the cryptocurrency is volatile, but it does not affect. We manage our treasury, manage our funds. Basically, it's about I think treasury management. And then we're planning to grow. We're planning maybe to raise capital from investors. The regular investors, the crypto investors, depends. But we structured our business that it's really sustainable and it's in a good position.
My second question might be a bit naive. I'm not a technologist. I know one of the problems in cryptocurrency and cryptocurrency trading is people losing their private key. So how does that work? If I own 50% of the tokenized house and I have a private key, is there the chance that I could lease the private key and 50% of the house?
Okay, so Victor can say you lose the private key.
Yeah, so that's what I think scares some people away from trading, is because you can, it's quite easy to lose it.
Victor, he can answer from the technology point of view.
Depends how you manage, but for example, you can trade directly from your, with Stellar Decentralized Exchange, you can trade directly from your ledger account, or it's the safest way, and there are other ways to safeguard, and StellarX provides additional safeguarding measures to protect holders of tokens from losing them. Yeah.
How?
Basically, the most straightforward and easy way is to hold your balances on ledger. So that's, of course, anything can be broke down, but come on, that's unpractical for anybody to try to hack your ledger for some thousands of dollars.
But to the average investor who's not involved in the space, that means nothing to them, a ledger and having to use private keys and stuff. Will there ever be a way where they don't have to go through all that? Just, if I like the idea of a tokenized house, I don't know, is there an easy way to do it than, get a ledger, and then go through the whole process of actually getting the tokens themselves? Or will it always be?
Security tokens have to be lodged with a central securities depository, so ultimately you can just burn those coins and reissue them. It's not, with Bitcoin, it's a fair instrument, but the security tokens you can burn because they don't actually represent, if you think about it, actually represent part of the house, just because you burn and reissue them, there's less security issue.
It's the same process. If you imagine someone passed away and the house was left in a will, these people that were false transfer. I think here already have that stuff going.
Basically, what mentioned about the depository. Once you issue security tokens, it's registered with the depository, right? So then we have a custodian where we update who is the owner of these security tokens. So if there is an issue, you can go back and see and deal with the issue. If the, let's say, tokens are stolen, we burn them, and then we reissue the new ones for that case, for that person. With the utility tokens, it's not possible because there are no KYCs, etc. In our case, we know exactly who it is and who is the person. If there is basically customer service comes to us, we deal with the issue, and if it's stolen, so that's fine. We reissue.
Yeah, it is possible to make different arrangements to provide recovery for the key, or to, but that's depend. There are different solutions, and there will be more solutions, and it will depend on willingness of specific investor to give up ability if there is ability to get back your keys and you think that somebody else holds it. So if you want to trust somebody your private key, you will be able to recover and maybe not use it explicitly, so it will diminish any chances that somebody will steal it. But
on the other hand, you have to trust somebody to hold it for you. Otherwise, you can buy a ledger or you can hold the private key on your own. So it's much greater range of choices compared to banking when you just have to trust your bank.
Yeah.
Any other questions?
Thanks.
In the back?
Yeah, thanks. So I just want to ask about the KYC process. So how does that work exactly? Someone provides the necessary documentation about whether it's a passport or ID, and then what happens?
Yeah, we have a global reputable KYC providers. Basically, they will be our partners, so we'll do the KYC with them. We're not going to do ourselves. Basically, we will build our policies, and it will be basically document-based identification. They will pass through the, depends on which country they're coming from. It will be checked with the databases, matches with the, personality, and then it will be the person who is actually will buy, invest into security tokens, trade security tokens. So that's the case.
I was wondering, there's a lot of blockchains. Why did you pick Stellar?
Yeah, we picked because our mission is basically to break barriers of illiquid investments and fractionalize these investments. So that it requires really a lot of transactions. They are micro transactions, and if we, Victor showed compare the Ethereum and Stellar, this is sort of 9 day, right? So our transaction has to be fast. They should not cost. I'm not sure if you see and remember the table. Was the Ethereum was compared in Stellar. Stellar can do 3,000-4,000 transactions per second. All of them 4,000 cost 1 pence. Where Ethereum, because gas is fluctuating, we cannot foresee how much is a transaction and what the transaction cost. 10 cents 1 transaction. So that was the the biggest basically decision factor why we choose the Stellar blockchain.
With your vision, which I completely agree about digitizing equities and shares of the future, I can see that the days of the stockbrokers are coming to an end and they'll become like dinosaurs and legacy. But how do you see the stock exchanges, such as the London and New York Stock Exchange and NASDAQ? What would their role be in the future?
Yeah, interesting. Actually, we're talking to several big multinationals. At the moment, we do the pilot projects, big exchanges, global exchanges. We haven't signed yet, but we may do because actually it's different infrastructure. They have different infrastructure. It's it's huge. It's really heavy in the cost, etc., etc. Blockchain is very light. So what I would like from the big exchanges is these liquidity pools. There is high liquidity, a lot of investors, etc. That's what we need from them. But liquidity is the biggest driver of the whole what we are doing, and we're pooling, all what basically the form of association is also to collaborate and to create this industry and collaborate and create liquidity pools. What we can do, talking now to one, actually some of the players here crowdfunding in UK, so 20 different companies. We're thinking that we may use blockchain technology because all these 20 is originators. So we pool ourselves as originators, we create a pool, liquidity pool. All these basically issued securities on blockchain equity can be traded, and there will be a new liquidity pool for the crowdfunding. So liquidity pools have to be created with it, with the exchanges or without them. So if without them, it will take more time. If with them, we'll do faster. So yeah, there's this technology and compliance issues, I think, working together with the big exchanges.
Any more questions for Arnoldus?
Hello. I have a
question around custodian services for different types of security. So today, as we know, we're looking to tokenize and securitize a lot of these assets. So talk about real estate, bonds, shares, etc. So specifically, we have institutions that are built catering to these, and these institutions are centralized, regulated. So for instance, take shares. You have a broker who stores those shares. They're sort of approved to be able to do that. Now, with platforms such as yours, how do you sort of ensure that for these different asset classes, your custodian services sort of adhere to the regulations that are deemed by the respective authorities? Because you're not literally talking about any asset class that you can securitize and can sort of store for people or exchange. So how do you make sure that you're able to sort of cater to that?
So can summarize just a short question. How do we cater that?
How do you basically handle custodian services for multiple asset types? And do you have to go and get licenses for each of them?
Yeah.
Or do you just work with partners?
So custody on the issuance side, we'll do with one partner. We'll disclose it later. Partner who is FCA licensed. So we'll do the custody with that partner. So once we issue securities, the shares will be basically held within that custodian. The security token will represent the beneficial ownership of that share. And all these shares will be held basically with the custodian. And then we'll have escrow, also regulated by FCA, where the money from client money comes. Let's say campaign, they basically accumulates for the campaign. Campaign is finished, the milestone, the funding is basically reached. Then from that escrow custodian, then it's released to the asset owner, to the fundraiser. So we will deal basically with the regulated, FCA regulated partners.
How do you replicate this for different asset types? That was my question.
Asset types? What do you mean asset types?
Shares.
So in our case, we're doing only shares.
All right, I see.
Shares.
Okay, so if you wanted to expand into real estate, for instance, tokenizing, would you consider like securitizing that and then?
Real estate, you mean directly?
Yeah.
So the ownership, what is possible in our environment is only beneficial ownership. When the HMRC changes the registers on the blockchain, if it's possible to register directly token into HMRC, so then it will be possible to change this and remove the custodian, and then the custodian will be abandoned, because on the basically lifetime, meaning how this moment basically if the ownership changes, it will be basically a record on the registers, right, on the HMRC. So that has to change actually from technology point of view, and that has to evolve forward.
So you'll ultimately look for HMRC to be the ultimate custodian?
Yeah, but we're talking about UK. For example, in Switzerland, we can do it right now. We can do the real estate tokenization straight on the registers, because they basically are a bit forward with the development. So it depends on the country.
Thank you.
So the rights of the token owners for a building would be similar to the rights of a normal owner today, yeah?
Yeah.
In the case of, to introduce liquidity, obviously, we would like, or the idea would be that token owners could be in Japan and they would have part of this building here. How would they be kept up to date with the valuation of the building and the state of the building and the issues that the building might have? Would there be brokers, or would you envisage the existing sort of investment banker type intermediary issuing reports or making markets of the tokens?
So it will be like this, if you say there is, the company is doing IPO, the company goes to the stock market, now it's liquid, and then the market decides what is the liquidity, if there is a liquidity premium or liquidity is basically evaluated based on the market conditions. The same for building. If you do tokenization, issue security tokens, and at the time of the issuance, because of the real estate, it can be valued by the reputable, let's say, with a track record valuation. So say we put the valuation, then on that valuation we issue the security tokens. And then these security tokens are basically acquired at that, valuation. And then later on, once it's listed for the secondary market, then the market decides if there is a liquidity premium or if there is a liquidity discount based on that asset.
But the information that it gets has to be from whom? From
say Savills.
Okay. So but Savills would have to continue to have an involvement with the building.
On the valuation side, no. On the
on the running side.
On the running, yes.
Yeah, because if let's say that we tokenize this building, right? And in 3 years' time, we buy the tokens today, and in 3 years' time, we find that there's actually a problem with the electricals, and there's got to be a massive new issue of tokens in order to do the electricals and all this kind of stuff to renovate. Somebody has to inform, and FCA regulated possibly to say that this is what's going on with the building. So there has to be a continued involvement by somebody who is an intermediary.
Yeah. So we apply basically one of our customer segments are asset managers, professional real estate companies, professional real estate asset managers, and we might co-invest and co-tokenize their assets. So basically we work with the professionals, they apply the best practices, the best standards, how to treat, how to maintain and manage the properties. So we'll do our best, from the industry standards point of view and also the customer point of view.
Thank you.
Anybody else? Okay, Arnoldus, thank you so much. That was intense. If you think it was too intense for Friday night, brace yourselves, because we have Sim Robinson from CMS Lawyers coming up on stage and hopefully sort out, say, 7% of all the issues that are out there.
If that.
If that. Settle for 5.
Hi everyone. Hi there. As said, I'm Sam Robinson. I'm a lawyer and I specialise in financial regulation and do a lot of work in the fintech side of things, particularly in the crypto side more recently. So I'm here to give you a bit of a whistle-stop tour in regards to the legal aspects of an STO. I haven't got many slides, I've got a few slides to go through, mainly because I didn't know how much interest it would be at this time on a Friday night. The lawyer's not normally the most attractive draw at 7 o'clock or so. So it's going to be 5 minutes, or it'll be half an hour, and we can see how it goes. So in summary, what I'm going to cover is what is a security token for regulatory purposes. And I should say that I'm only covering the UK position because I'm a UK lawyer, so I can't really comment on the other parts of the world. Then a bit about how they're regulated, and then a bit about the future. And what we have on this slide here is a comment that came out from the Crypto Assets Task Force report last month, or month before now, in regards to a security token definition. So security tokens provide rights such as ownership, repayment of a specific sum of money, or entitlement to a share in future profits. Now that's just a general statement. It's got no meaning in law or anything like that. But when we break it down, the terms that we hear in the industry are the tokens that you fall within utility tokens or payment tokens or security tokens. Sometimes they overlap, but generally that's the terminology that's thrown around. For a legal perspective, they're either specified investments or they're not. And if they are specified investments, then that means they fall within regulation. So the security tokens is let's call it the industry lingo for what in regulatory terms is a specified investment. So, and that includes the examples on the slide there, such things as shares, or units in collective investment schemes, or electronic money, and futures contracts. So security tokens that have these kind of features and result in one of these contracts bring with them certain regulatory obligations. And that's the UK level. The European level, similar legislation, but it's referred to as MiFID, which you may have come across. Similarly, specified investments is the UK terminology, and then you've got transferable securities at EU level. But it's really a similar activity and some of the definitions. Now, where are we with regulation? We've had a couple of questions and topics on this already, but the UK law on securities and shares came into force in 1986, and these shares so have been there, and definition and regulation have been there since then. So what the various regulators said fairly recently again is that the regulatory requirements are technology neutral. A share, if it's in this definition, is regulated. It doesn't. The underlying technology doesn't change that. So they've made quite a big point about saying that the law applies the same way whether you have blockchain technology or not underneath it. So going back to one of the points earlier on about the technology and custodian services and so on. If you have a share and someone's holding on your behalf, they're a custodian, they need to be regulated. So kind of one thing leads to another, but it all stems from the first point, which is, do you have a share or specified investment in the first place? And the technology underneath that doesn't really change that position. Okay, so far? So this slide has a high-level summary of the different legislation that applies when we have a security token that amounts to, say, a regulated investment. On the left-hand side, the first one we have there is a regulated activity. And again, we've touched on this already in the custodian's point, but also in regards to exchanges. So you'll be familiar, I'm sure, with how a lot of the exchanges in the utility market are just not regulated, in the UK anyway, because they don't do anything that is regulated. But as soon as you put a security token on there and you're trading shares, suddenly that becomes regulated, and that exchange is an intermediary. And there's something called an MTF, multilateral trading facility. So people who are suddenly intermediating these trades in security tokens end up being within regulation. So that's the first point to think about. The second point is the prospectus rules, and this relates to how much money you're raising through your security token. Utility token you can raise as much as you like, it's not going to be within these rules. But as soon as you're raising money in a security token, in the same way as an IPO, which we touched on earlier when we had the various different tables in the first presentation, you're treated the same way. So if you're raising a certain amount of money, more than £8 million, then you've got to try and fall within certain exemptions, otherwise you need to have an approved prospectus to do so. So you're playing, the rules have changed, you're playing in a different ballpark when you've got a security token in regards to the amount you can raise. So people either have smaller amounts that they're raising, or they make sure that the minimum investment is at least €100,000 so they can fall within certain exemptions. But otherwise you can't just have a blanket offer to the public without having an approved prospectus. So that's something that's different in the regimes. Financial promotion. These are the rules that relate to marketing any investment in the UK. I won't dwell on those too much. And then we've got the AML requirements. So the AML regime applies to securities and applies to security tokens in the same way. We've had a lot of conversations already about the KYC requirements that people need to follow and exactly how they go about that. Then we come on to the Companies Act 2006. And I put this on here for a reason. And again, a lot of my thunder's been stolen by various questions that's already been raised. But this is to do with putting equity on the blockchain, so to speak. And as I said, the rules are different in each country. But in the UK, we're playing with legislation that's 12 years old that wasn't designed for the market that there is now. So there's certain requirements to have written instruments and instruments of transfer and so on and things like this, which just do not fit in with the technology that's now available. So that's the reason why in a UK company at least, the equity on the blockchain, the legal title, just isn't available. You have to have the beneficial interest, as we've touched on already, and for UK companies anyway. You can do a bit more in other jurisdictions, but in the UK, they have got these requirements to think about. And then the FCA handbook. All FCA regulated firms have to comply with the rules in the handbook. So coming back to the custodian question, how do you ensure that they are fulfilling the requirements? Being a regulated firm, there's lots of rules in there they need to follow to become a custodian and to stay a custodian, and they apply to any type of asset. So how do you ensure that they are complying? they'll have their regular FCA visits, or of course regular nowadays, but they'll have visits, they'll do their reports to the regulator and so on, and if they're not playing by the rules, they should be picked up sooner or later, but they'll need to comply with those requirements. Then on the EU side, it really kind of mirrors a lot of what we have in the UK already. So MiFID II comes across to regulate activities, and then the prospectus regulation, market abuse. Market abuse is another big one because, as you are well aware, the market fluctuates a fair bit, and that in the stock market there's lots of rules. They regulate the stock market. There's lots of rules around market manipulation and market abuse and so on, which are just not there for utility tokens. But if you have a security token, all of these rules apply as well. So that's something to think about. AIFMD stands for the Alternative Investment Fund Managers Directive. Some of the companies that are raising money can be classed as funds, which means they need to have regulated fund managers. So that's something else that comes into play. And then you've got payment services and e-money as well. The tokens can sometimes amount to e-money if there's a claim on the issuer, and you can make it in effect cash in their tokens anytime. So people can do that for that reason, so they can avoid it. Industry body, I know that's mentioned one already, but the one on the slide is Crypto UK, which has a code of conduct. A lot of the points that I just mentioned is in their code of conduct on the website. I'm sure there's various people that already know about this in the room. But they don't cover ICOs at the moment, which is just one point that I put on the slide. This one, I don't know if it's probably too small for you to see, but this is straight from the SMSG, the European level body that produced a report fairly recently in regards to it's quite a useful flowchart in order to work out whether you end up with a security token or not. So I don't know if we can circulate this afterwards, but if you start over the sides and work your way through, it kind of narrows it down as to whether or not you're likely to be in the prospectus rules or MiFID or the AML requirements, and it all fits together. So if you haven't seen this already, see if it can be circulated, but otherwise it's on the ESMO website, you can track it down there. So what I've covered so far is a high-level summary of what is a security token for UK law purposes, and also how are they regulated. Now it's a little bit about the next steps for the future and what's going on in the legal space. And I'm sure you've all read that crypto task force report that came out in October, and that mentioned a lot of points around the government's analysis, and also had various steps they're going to take in the future. And it's not the too distant future either, because by the end of this month we are expecting a couple of papers to be published. The first one is guidance on the regulatory perimeter as to which crypto assets are in and which ones are not. So at the moment we haven't got that in the UK. Other countries have provided some guidance, but in the UK we haven't got that. There is some general guidance for all regulated activities, but not specific for this market. So we're hoping to get some guidance from the FCA later on this month. I should say that will be the consultation. The way it works over there is they consult, provide feedback, and then you have a policy statement before the rules come in. So even if they publish these in December, it will probably be until middle of next year before they actually are published in final form. And the next one is a potential ban on derivatives relating to crypto assets being marketed to retail customers. Now this one, it isn't a complete surprise, because you know, see the FCA yesterday is applying a similar ban for CFDs and binary bets more generally. So this one, I say, it wasn't entirely unexpected when they suggested this. But it's only on CFD, on the derivatives, where the underlying is a crypto asset, rather than the crypto asset itself. So there's a bit of a distinction there. And one of the reasons is people can get such heavy leverage, and so on. You go on the likes of eToro and other platforms that trade in the CFDs, you can get quite high leverage on these products. Then the next one, this is the one, again coming back to some of the comments earlier, this is the one that could be more groundbreaking for the industry, because at the moment we've been talking about security tokens in, everything else out of regulation. This is a potential change to the legislation itself, which will bring more into scope of financial services law. So going back to my table here of what's in for security tokens, we may well end up with having more things in here in the future because the legislation will become wider and capture more things. So that will be quite an interesting development on how this fits together and whether or not more types of tokens are going to be called. For example, the payment tokens, people are saying that if they're transferable, they should be called, but not transferable, then they shouldn't. And that's in the European level guidance too. So we'll see what happens there, and that's due in early 2019. A bit further on, we've got the 5th AML directive, which is going to capture the crypto to fiat exchange process anyway, which is coming in. And then the others are much more general in the sense of the FCA continuing to focus on the adequacy of their regime and then the tax treatment of crypto assets. This has also been a bit of a, I wouldn't say an issue, but nobody quite knows in a lot of cases because HMRC hasn't been very forthcoming with any public guidance, but we are now expecting that to come out in early 2019. So overall, you can see that later this month and by the end of Q1 next year, we should have a bit more visibility on where the UK is going in the regulation of the crypto industry. The other countries are a bit further ahead, but the UK is getting there, and at the end of Q1 we should have more sight on that. As well as the UK though, there's also developments taking place at European level, and the European Parliament is also suggesting making some changes. For example, much earlier than August, they published some guidelines around the crowdfunding industry and potential regulation there, and they've suggested in effect tagging on the ICO market into that framework regulation. So that could be one option for the future. They also are looking at adding in, as I said earlier, asset tokens into the MiFID instruments, which again brings with it the exchange regulation and custodian regulation and everything like that that stems from having a regulated investment. So that was everything from me on the slides anyway. It's supposed to just be a quite high level summary of where we are today, where we're going in the future, and the different regulatory requirements that apply depending on the type of token that you have, that you are issuing and then trading in the future. But happy to take any questions on anything in particular.
Questions? Any questions for Sam Robinson from CMS?
Yes, presentation being circulated. Are they going around? Question from the front was, is this being circulated? Are they going around?
I haven't seen anybody.
No?
Was it from you?
yes.
Oh, okay. Let's double up for everyone.
Just a practical question. How will we get this material?
Being circulated? Yeah? Hi.
Hi. I had a question regarding the different regulation which apply to the security token. So we were speaking about liquidity earlier. So one of the big interests of the SEO would be the additional liquidity that you could bring to this kind of market. But what I understood from your presentation and also what I read is that will still be kind of limited to institutional investors, or at least accredited investors. Do you see any change in the regulation or in the, I would say, or from Europe or in the UK, where they would like kind of circumvent this accreditation order and to allow non-accredited investors to invest in assets?
Sure. So I can break your question down into two parts. I think one is access for the investors, and then the second one is the liquidity once they've actually got their investments in the first place. So if we go back to my list of the framework that's in place, the financial promotion rules cover the first point that you mentioned as to who can you market to and who can invest in the tokens. And without going into too much detail, using too many legal acronyms, for the security tokens, you can generally go to the retail market, institutions across the board. The retail market, you can go to high net worth investors, which are classed as people with a net income of 100,000 or assets of 250 or more. Sophisticated investors, and also people that confirm they're investing less than 10% of their net worth in shorts. That's the category of investor you can go to. So it opens up the pool quite a large way. So you can still go, at the moment, utility obviously you can go to anyone, but security tokens, generally speaking, are falling in that bracket. There is one slightly further up, which is called a non-mainstream pooled investment, an NPI, which is where you lose that 10% category and you just have the high net worth and sophisticated. But most of the companies should be falling within the lower bracket and can get more exposure. And on to your second point, with liquidity, once they're in, that comes onto the kind of secondary market trading that they have, because people can invest in the assets, but it doesn't automatically mean that they can then sell it in the future. It depends on the market that's there and the liquidity, and whether it's traded actually on the website, for example, where they bought it from, or on an exchange, a third-party exchange. And that's purely a kind of supply and demand liquidity question. The regulation isn't going to change whether they can or not. So once the company's listed on the platform or on the website, there is the ability to trade, then it comes down to kind of supply and demand there. But one point to think about is, as I mentioned earlier, if you have a security token on an exchange, you're probably going to be an MTF, a multilateral trading facility, unless you're a regulated exchange in its own rights. Otherwise, you end up being in the MTF bracket. And that's quite a high burden. You have to have quite a lot of regulatory capital and systems and controls in place. And so it's not a small ask to be set up as an MTF. I'm sure Matt will talk about it in more detail. I think I'll in a second.
How can we control ST tokens, security tokens, from being enlisted on decentralized exchanges? Exchanges that won't require any KYC.
So if they are...
So Ether Delta, what stops me from enlisting a security token on Ether Delta?
So if they are an EU exchange, then they'll be within these rules here, the EU Fourth Money Laundering Directive, which means legally they should be carrying out KYC and AML checks.
But this is a decentralized exchange, I'm asking. Is there any way to stop it? Because that means I will buy a security token and then I want to sell it off the market. How can you stop me from doing that?
Answered?
Yes, I think it's a lot.
Do you also have any information about the utility tokens? I know this is about STOs, but do you have any news on that? Like how, if they will be regulated in the future, is it going to be the same as with STOs, or there will be something different will be applied on them?
So if they become regulated, it will be the same regime that applies to the security tokens at the moment. And at both European level and through the Crypto Task Force report, the consultation papers that we were talking about, particularly this one here, will investigate what type of utility token should become regulated in the future. So that's a long way of saying, yes, I think the smart money will be on it, they will become regulated, but exactly how is still to be confirmed. And the features, we'll separate them into subcategories, so at least some are, coming back to my transferable, non-transferable point earlier. But I think they will become regulated in the UK. And then it may not be a bad thing, like we said earlier on one of the slides, because once you have a bit of regulation, then in certain investors will class as a bit more of a safer investment and are more likely to invest, particularly in institutions and the funds and so on.
I had a question around funds. Companies have raised a lot of money through ICO in the last year or so. It's quite evident the amount of money that's come about, and a lot of these tokens now, they were always, some of them are deemed as securities, and in the future, like companies, if they have a suspicion that they might be security, how is the bridging going to happen? Like, how are these tokens going to come back into security, and how much is the regulator okay, to do that? I mean, there's going to be a big industry in itself, right? Like, there was millions of dollars, perhaps even $1 billion, where money is just lying around, and they want to move into, like a most kind of securitized kind of a way, where the money is just not lying as ICO money. You see my question?
Sort of.
So, companies raised money in ICO last year, say $50 million, right? And they were not sure whether it was security or not, or, and now suddenly they've realized, shit, this is security, right? I mean, so there's going to be an industry now catering to those kind of clients, isn't it? Yeah. How easy is it going to be?
So it's the next PPI ultimately.
Yeah, precisely, yeah. So, do you have any sense of how is that going to like play out?
Yeah. So it's an interesting question. It's something that came up a lot after the crash in 2008, 2009, because again, it comes back to the financial promotion rules that we had here. Because if you market an investment in breach of the financial promotion rules, in effect, there's two penalties. One is it's a criminal offence and the FCA can come after you and so on, but we'll leave that to one side. The commercial side is what we're talking about at the moment. And on the commercial side, in short, someone can sue you for it and they can claim back the amount of the investment plus any damages. So if we just play this through, if that happened a couple of years ago, you invested in a token that was actually a security token and should have been within those rules and was marketed as if it wasn't. If you lose all your money and you're looking for how can I finally get my money back, you have this option of suing someone for breach of the financial promotion regime. And the reason I say that is because it was discussed a lot after the crash, and where people were looking for any way to try and get their money back. So you have got that option. So you could see people in the future, once PPI is over, which ends next year, what are they going to do next? Looking for something like this is a possibility.
My question was more around these companies coming to like law firms and saying, hey, can you help us, convert our existing, stacks of, ETH, BTC that we collected into a security token. Can you help us with that service?
You mean transferring their utility token?
How it becomes a security.
So they can issue a completely new token and use the first one as a payment token for that one. Is that what you mean?
Yeah, but the question then was what happens to customers, right? Not customers, people who have actually invested in these tokens, they might not become qualified anymore. So I'm assuming that they will get refunded and only the qualified would be get back.
There wouldn't be a mandatory requirement for you to, if you've got the first token, it's not mandatory for you to then use that to buy other tokens. So they either keep them or they take part in the deal, one of the two. And if they do, as long as they're in the 10% group and so on, like I mentioned, then they can do so from a legal perspective.
Thank you.
That's your question?
Yeah.
More or less? Yeah.
More or less. Yeah.
So, because we are a China-based company, we're going to launch crypto exchanges, working with co-partner with Bittrex, and we're going to help. We want to help some of the blockchain company in the UK to get listed in the exchanges, but they have to pass the KYC through the Bittrex International. So, what sort of legal challenge we could face, because we are like an overseas company. Yeah, we're based in China, but we're going to launch the exchanges in Hong Kong. So what sort of legal challenge?
So if the exchange in Hong Kong, it will be the Hong Kong rules that will apply to the exchange for how they operate. Where the UK and Europe kick in is any marketing and so on that's taking place into these jurisdictions and so on, and taking any customers from these jurisdictions. That's what you would need to think about, is the overseas element of doing anything in the UK from a marketing and also serving those customers. And to answer both of those questions, the first one is financial promotion again when you're marketing. The second one is you could well require a license by dealing with the UK customers. It depends on exactly the circumstances, whether you're doing any regulated activities in the UK, because there's certain exclusions and exemptions and so on. But that's the analysis to think about, is exactly what's going on in the UK or any other country in Europe.
Okay, thank you.
I was wondering, in terms of legal work with paperwork you have to do for an STO. Is it a lot with the current rules you have, and can you give a ballpark cost?
That's a tough question.
Because in theory, these things were great because they were cheap, right? The moment you start putting rules, obviously you need lawyers, and lawyers are expensive. And so just to have a sense, how expensive this is getting.
Yeah, I understand where you're coming from, because we are moving to a regulated world regarding more legal regulated agreements and so on. So there is an additional cost there to go for. I suppose there isn't a big jump from a utility token to a security token, to be honest, provided it's not a listed security. Once you end up going for a listing, that's when you have a lot more rules, because you've got to think about the extra exchanges requirements as well. So that's when you jump up a bit further. Where you jump a lot more is when you, or if you need an approved prospectus, because like I said earlier, if you're going below 8 million or one of the exemptions, then you produce your own marketing material, lawyers put in some risk warnings and disclaimers and verify, and you're good to go. But if you need an approved prospectus, you've got to go to the FCA and get that approved. And that's the legal fees, and just the time and effort is probably a 3 to 6 month process. You're getting up to kind of 6 figures then in regards to the legal fees, but otherwise, so you're not there. A lot of people prefer to not get the approved prospectus to make sure they want the exemptions, for obvious reasons.
Okay, Sam. It appears that we've depleted the roster of questions. Thanks a lot. I wanted to sort of pause for a second, because after Arnoldus's announcement that we're going to start KYC on Tuesday next week, and then launch the STO, there's a little bit of an overexcitement in the community. So I wanted to bring him back up to clarify a few things, if you don't mind. Here.
Yeah, there was a question also in the background when we're gonna start STO. So as I mentioned, the KYC will start on Tuesday, so that's 11th December. We start KYC, and in the meantime, we're basically building the legal framework, and we can announce the project which we're gonna tokenize. By having the permissions, then we are able to announce the project, which will be, the first tokenization project. And basically, the deal is being structured on the background. And once the permissions up and running, once we have the permissions, then we basically list the project on our platform. And then the investors who pass the KYC will be able to invest in the project. And then we'll start basically advertising this project.
Much clearer. Yeah, much clearer. Thank you so much. Because
maybe at the end you may pick up several questions from community and check our Telegram.
I certainly will try. Yeah, hopefully they'll just text them over to us, and I'll be able to pick them up off the live feed and ask them in real time. Any more questions for Sam?
Okay, thank you.
Thank you so much, sir. Absolute pleasure. And we're gonna give the floor over to Matthew Williamson from Thistle Initiatives. That's regulatory compliance all the way. So that's the talk of the day right now. Feel free to do the thing to it.
A bit dry after obviously Sam, and then it's just going to go into more compliance, more legal framework. Obviously, you've got guys running away. I don't blame them, so it's fine. But yeah, so what I want to cover today is what actually the compliance looks like. So we're going to go into a little bit more detail on top of what Sam has gone through in terms of framework. So I know there's been some sort of KYC AML questions, and I'll try to address some of that today and what firms need to do. But also then go into a few other factors and elements, particularly on the customer onboarding side of things. And that's where we see a lot of the risk coming in, and actually the sort of areas we need to focus on. So, go to the next one. There we go. Sorry, it keeps popping up like this. I had it from another presentation, so recycling. So the three things I want to cover today are sort of key obligations. First one, financial crime. Second one is customer onboarding. Now they might seem one and the same or very similar, but actually what I'm sort of focusing on in customer onboarding is actually what some of the requirements are for individual investors. So there's different sorts of investors out there. Sam sort of covered on it briefly, and I'll go into a little bit more detail there. The third one is financial promotions and disclosures again. So financial promotions wise, our focus is really understanding or making sure the investors understand the risks associated and actually informing them what these products need to look like. So financial crime, obviously Sam's touched on it, the fourth money laundering directive and soon to be next year the fifth money laundering directive are sort of capturing these firms that are offering security tokens because of obviously the regulatory framework. So undertaking a risk assessment as part of the fourth money laundering directive, it's very important. A firm undertakes a risk assessment of the potential one customer that's going to come on board. So we're looking at the actual individuals themselves. The second one is jurisdiction, obviously a very important element as well. So the UK, obviously, if you're a UK company and you're onboarding UK individuals, the risk appetite is potentially going to be a bit higher than if you're considering actually accepting investments from, let's say, a jurisdiction deemed higher risk. Then you're going to obviously have a larger risk appetite, and obviously that's going to impact you accordingly. Product is the third one. So obviously here we're talking about something that is generally a little bit more riskier, and obviously we're considering as well a lot of the investment is coming from cryptocurrencies themselves. And as Arnoldus touched on earlier, obviously it's very difficult, or far more difficult, to understand who the beneficial owner is and where those funds are coming from. So it's really important that these frameworks are all built in, and then obviously when you bring that onto a sort of an exchange platform, again the complexities increase. So it's not only at the initial stage when you're issuing a new security token, but it's actually then anybody then joining a secondary market, and then actually how are we going to assess each and every one of those individuals. So it's very important that firms consider all of those points. Again, moving down into a more granular approach, we've got three different types of investor, or types of due diligence which we need to do on an investor. You've got simplified, which is really quite high level and basic. We then go into customer. Now this can be anywhere from sort of just asking for address history, name, address history, date of birth, and then crossing against registers. Or actually we could go into more detail there and ask for ID, proof of address, and then even then building on from there, you may ask for enhanced due diligence, which is we're now looking at sort of source of funds and something far more in depth to understand where the money's coming from, and really make an assessment there. So it's very important these are all built into a customer journey before the customer is able to purchase any of these security tokens. So customer onboarding. So I think here we're looking at a few things. So Sam's touched on it on a few sort of occasions, and I think just to reiterate, there's different types of investors. You've got retail, professional, and eligible counterparties. So again, within the retail, you've got high net worth, you've got sophisticated, and then you've got what Sam mentioned, anybody investing below 10%, which is also known as restricted. So each of them must certify as being one of those before they can then proceed through the platform. Certifying yourself obviously means that you can be or have the ability to opt into certain securities and others that you may not be able to opt into. An example might be a unit in a collective investment scheme is deemed only something that's appropriate for a high net worth or a sophisticated individual, whereas the crowdfunding sort of element, where we want to sort of market to the mass market, we're looking at something that's more crowdfunding orientated. So it's really just simply a share in a company. The second or another obligation, if you're, whether it be crowdfunding or actually you're looking at something more substantial, such as a unit, is an appropriateness assessment. So if you're not either giving advice or doing any portfolio management on behalf of them, you must assess appropriateness. And that is the customer appropriate for the particular asset which is on offer, and you must, or the firm must, establish whether they've got the relevant knowledge, experience, and the previous investments that they committed to. They then must answer those in a series of questions, at the end of which, if they fail, then there's sort of a prompt for education before they can then come back, retake the test, and then hopefully proceed to the next stage, which is finalising the KYC process. Now, as I sort of mentioned, that's sort of a middle ground. The next one is when we go into suitability. So this is now, rather than a standard set of questions for the investors to complete, actually what we're doing at this level now is asking individually, who are you as a person, what's your personal circumstances, understanding then your attitude to risk, sort of incomings, outgoings, dependencies, all of that then produces or gives the advisor or fund manager a good idea about who you are, and then from there they can then say, yes, okay, this asset is particularly suitable for you, or no, this one's not, or give you, a very specific sort of remit in which you should work into and what we might do. And that's on the advisor side of things, but I think on the sort of portfolio management side, it might be a discretionary management. So we'll take your capital, and then from there, obviously invest in products that we deem suitable for you based on the answers and everything that you provided as part of your suitability. So the third one I want to cover today is financial promotions and disclosures. So we touched on financial promotions already, but this is more now at a granular level, at a firm level. And so once they're authorised, when you advertise anything to the retail market or any wider market, you need to ensure that you've got appropriate risk warnings. So the obvious one is capital at risk. So whenever you invest, obviously it's an investment and your capital is of course at risk. So you need to make that clear to the customer whenever there's an inducement for an investment. The second one is past performance comparisons. So obviously looking at previous or historic performance and saying like for like, this is like to happen in the future is obviously, the trajectories generally sort of suggest potentially that might be the case, but actually, you need to sort of suggest to them that there are peaks and troughs, and as such, past performance can't be a reliance on what's going to happen in the future. The third one is illiquidity, and obviously something that we're looking to change with security tokens. So in a traditional market, particularly if it's an unlisted product or an unlisted share, the assets are generally illiquid. You're not guaranteed to sell them. Obviously now that's something we're looking to change, and obviously bring in this sort of MTF exchange opportunity where actually we make these tokens more and more liquid. However, with the existing frameworks, it's still the case that these are liquid products, and as such, we do need to treat them like that and really inform the customer of that being the case. Disclosures. So I think this is where we go more into the individual project. So as Arnold was saying, it's sort of an opportunity. So you'll pick and choose a potential opportunity. You'll then say, right, okay, who are you? What are you actually offering? What is this? It might be, a building. It might be this building. We need details about the building. You need to really tell me everything about it. And this is outside of the prospectus rules. And this is for any sort of publication. Full information and disclosures on the particular deal. So again, risk warnings, any potential issues that might creep up as part of this, anything that might impact any sort of investor coming to the market. And obviously most importantly as well is fees and charges. So what people are actually liable to pay. Is there any hidden costs, or is it all up front? Is there a fee to the platform provider? Is there a fee to anybody else? So that's obviously a very important element and must be considered as part of the initial disclosures piece. And I think appropriate marketing as well. So Sam touched on it with non-mainstream pooled investments, but obviously marketing something that's not appropriate for the whole market, so the restricted customer as well that I mentioned earlier, must be curved, and actually you can only market to that segment and really only speak to individuals from the high net worth or sophisticated or above categories rather than just the restricted as well. So I think generally that sort of covers everything from that approach. I know it's quite high level, but obviously to go through with you guys the whole FCA handbook and what the requirements are, I'd be here all day, and it's Friday night here, everybody wants to go home. So that's as a sort of snapshot, that's generally what you know, a firm looking to enter the space or anybody looking to raise through an STO needs to consider as part of that customer onboarding journey. So I suppose, is there any questions on the back of that or anything else that anybody wanted to ask me about this sort of framework and compliance?
Thanks for your talk. I thought it was really interesting. You mentioned there that there was a requirement to kind of give a disclosure about like you can't rely on past performance as a future indicator. Is there any considerations, or does that actually cover comparing your offering to similar things which have happened in the past? To put that into context, we've seen quite a lot of things in blockchain and crypto that have said, look at, you know, X asset and how well it's done, we are the next one of that. Is that the same thing as comparing the future, I mean, past performance of your own offering?
100%, yeah, it's exactly that. So you'll use previous performance of either something that you've done previously or something that's similar to the token or potential offering that you're looking at, and that is not being, you're not able to rely on that as future performance. So obviously in the ICO market, what we've seen is that that's been happening quite a lot, but because it's not regulated, it doesn't fall within the regulation, obviously it can't be captured and monitored by the FCA. But obviously as now we're in the sort of security token element, that is now a requirement, and obviously you do need to make sure that you fully disclose and everybody understands that this is a product, it's its own different product, and the market can change at any time, and that's going to impact it accordingly.
Okay, fantastic, thank you.
Any more questions? I think you've covered it pretty well.
There we go.
Excellent.
Thank you very much.
Excellent. Thank you so much. Speaker, if anybody has any general questions, I guess, or maybe.
Question. Is it Victor?
Victor.
Yeah. So my understanding is if you own an asset-based token, you have to hold a percentage of the total value in SLT, right? And there's a maximum supply of SLT, so surely there'll become a time, I think it's 6 million SLT, I might be wrong, 7 million. So surely there'll become a time where there's no more SLT left for the ABTs, if that makes sense.
So what's the question?
The question is, can the network scale? If there's, you know, if I own an ABT and let's say I have to hold 100 SLTs, then as more ABTs come on the network, there'll come a time where there's not enough SLT for the ABTs. That makes sense.
So we have a model, actually a theoretical model now, and this is, you know, basically we define as exponential growth in this because of the limited supply. So the more participants will go on the platform, the more demand will be. So that potentially can go in value, the utility token, if it's used more and more, right? Then we are flexible to change the limits, what you need to hold in order to get an access into the investments, right? So we always, basically, we have flexibility to change, you know, the limits, and that would basically reduce the demand for this.
Okay.
So yeah, we are flexible. So yeah, Victor can explain.
And again, we have the centralized management system implemented with voting, and of course, such questions should be put to community vote if some requirements should be more strict or less strict. That's one way to go, and actually it doesn't seem to be possible that there is no more utility tokens left given the mechanism put in place. So it has safeguards to prevent such situation, and actually those safeguards, I don't think they will be needed. The system suggested will not run into a situation of absence of utility tokens on the platform.
So say we have this situation, so then basically we, let's say, make 5 different models, and then community can vote which model they can basically approach, and then we basically can adapt accordingly what the community decides.
Okay. And then
in the future, there is this issue.
One last question. So, say if you have to hold 1% of the value of the ABT in SLT, and then the value of your ABT fluctuates, how does that work? Do you then have to sort of, start sending back SLT as the
you will be able to sell it back if it goes down. You will have to buy back if it goes up.
Yeah.
But that's
at least at first it's real estate assets. Of course, there may be some fluctuation in their price, but it's not that drastic as it happens with cryptocurrencies, especially currently. So, okay, 10% change in the value of real estate, that's a matter of a year or something like that on average. So that's not something that's gonna change unexpectedly and significantly on a regular basis. Maybe that may happen once or twice within a long period of time with 1 or 2 assets of like tens of those ABTs.
Okay, thank you.
Okay. Anybody else? I guess we're done. Hopefully we've had a great discussion and all the speakers are here. This is really, I think for Friday night, this is a success. I think we should give ourselves a round of applause and happily go out. Okay.